Good morning, good afternoon if you're over on the other side of the pond. Good evening if you're way over on the other side of the pond. It is Tuesday, May 23rd, and we're back at it. We are on day 10 of our funding challenge, where we're taking a $10,000 funding challenge with bespoke funding, and hopefully by the end of 2023 we have grown that to $2 million, which is their maximum allocation that they allow on their two-step program. So that's our goal, that's our hope. We knocked out phase 1 in 5 trades over 7 days, I think. We got our phase 2 credentials Thursday or Friday, I think. Yeah, Friday. Didn't take a trade Friday, and then we took one trade yesterday, which we'll review right now because I called it right after I got off of the live stream yesterday. You can see, let me hold on a second, let me fix my screen here a minute. All right, so yesterday we were watching all of this, and I had said all along that I wanted to see a grab of buy side liquidity here, and then a market structure shift, and then leave behind a breaker and a fair value gap. And this was our breaker. We got off right around here, I think, somewhere in here. And price had not done this run up. I think it was moving up when we got off. And then right as we were getting off, it ran up, grabbed liquidity, came down. We got a breaker structure here. It did leave behind a small fair value gap. And I called this out on Twitter yesterday at Venator Trading, where as price was down in here and this candle closed, I immediately set a sell limit order for right here and put my stop loss up in a safe place and then let it run. And then we watched this play out over the next 35, 45 minutes to an hour or so. And man, it did react right off of our entry. We went into a little drawdown, and then it came down almost 1-to-1 right here on this candle. And then the next candle came down and it was looking great. It was moving great. We go to break even at 1.5, which would be down here somewhere. It came down, and then we had that, I don't know if you guys were following on any of the socials or the market yesterday, but at this time right here at that 10 o'clock New York time, we had that fake AI image come out online of an explosion at the Pentagon. And for just a few minutes, the markets thought it was real, and they went haywire. And so we had this drop and we had this massive run up. We almost got slapped on our stop loss, but we did not. We stayed in the trade. We don't move our stop loss. If it hits it, it hits it. And then within a couple minutes, it rapidly pulled away. And then I was like, okay, this is great. The next 15-minute candle opened, and then we had this sharp drop. And it's all the way down here. Remember, this wick at one time was a whole body candle. And so I was like, oh man, I'm feeling really good about this now. So I tweeted out, moved to break even because it had crossed our 1.5 R alert line. So we moved to break even, slightly into profits. I didn't go far enough into profits because this, my account is down $6.50. So I didn't account far enough. I should have gone another half a pip, and that would have made it a true break even. But on this next candle, it didn't leave a wick. It just shoots up, wicks us out. It didn't quite get to our line here, but it did on MT5, wicked us out. And then what's it do? It drops all the way back down. And it does hit our, right there. It actually wicked our profit target. And then it comes all the way back up. And I actually thought about re-entering here. I didn't. I thought about it, but I didn't. And then we just consolidate, and now you can see we've just fallen off overnight. So here is our Asian session high. Here is our yesterday's high, today's high, Asian session high. This is your true day open at midnight. We had an open, we've had a high, and we've had a low. We've had a big expansion through London. As far as daily expansion goes, I don't know how much more room it has to run today. So on the euro here, I would be looking for a pullback up into these ranges. I want to see it get back up into a premium, get into an OTE level. This is the full London session here, from that high to that low. This is the latest swing high. So either way, I want to see it bare minimum get back up into above the high of this candle on New York. Maybe we have some news coming up, so maybe we might get a pop-up before we get a continuation of the London. So we're just going to be kind of watching that. This was the weekly volume imbalance on the euro that we dipped into last week. I think we're going to head back down that way. So yeah, that's kind of where we're at. So we're just checking it out right now. There's not much going on. You do have a small little order block right here where, you know, I'll be interested to see now that we're into the 7 a.m. hour here in New York. We pulled back over the last hour. How far are we going to get up in here? Again, my system, I don't want to sell at the lows. I want to sell in a premium level. So we had this big run up. We had a pullback. We filled in that imbalance, and then we dropped away. We've had only downside delivery on price. So I would only be anticipating another downside delivery on price after we've rebalanced some of these imbalances since about 4:30 this morning. So that's kind of what I'm eyeballing right now, and it's just going to be patience. The pound looks very similar. You had this big drop, a rebalance, another big drop. If you look on the daily time frame right here, where are we ultimately looking for the pound to drop, take out some of this buy side liquidity down here? I don't know that it gets there today. We've had quite an expansion in London. Do we get continuation and get another big down candle for the rest of New York potentially? I would, if we don't get a pullback today and an entry on the pound, then I would be looking tomorrow for a retrace back up into this daily order block right here, and then a continuation down Wednesday, Thursday, Friday to grab this lower liquidity here. We've got red folder news today, tomorrow, Thursday, Friday. I think almost every day this week we've got something important flashing on the news that's going to create some volatility. And of course, you've got the debt talks. The debt ceiling talks are causing a lot of disruption and uncertainty in the markets right now. So until the politicians figure out how they're going to screw us all over one way or another, doesn't matter which side you're on, it's not in our interest, no matter which way they decide to go. So we're just watching and waiting, and that's kind of our setup. You can see on the hourly time frame here. If you're taking it from this leg, your premium would be back up in here, and so we're just going to watch and wait and see what the market gives us today. This red line here was this old drawn liquidity, I believe that's a daily low, Let me just confirm that. Yes. So we have reached below sell side liquidity here and sell side liquidity here. Here's your next target. Your next 3 targets are these old daily swing lows right here. And I would be most interested in this swing low because this didn't grab it, this didn't grab it, this didn't grab it. So this is the swing high formed off of this swing low. And then once it gets broken, so all of this in here is still inside this dealing range. So here's the swing low that was created after this swing high was broken. So if that makes sense, that's why I'm targeting this swing low as sell side liquidity. There's sell side liquidity under each of these quote unquote swing lows, but this is the true swing low because this high wasn't broken until here, and then it created a new swing low right here. So this is your higher low. This is your next higher low. We've broken through that. We're starting to just kind of chop away at all this smaller liquidity until we can get down here to this true swing low here. So that's why that's the sell side liquidity I'm targeting ultimately for the pound dollar. But right now, because we've had such an aggressive run down on London, I was really hoping that London would give us a high of the week opposite, and then we get the drop in New York, but it didn't give it to us. And same on Euro. I was hoping it would get back above, give us a high of the week, maybe retest this 4-hour order block right here, and then fall off. If we're looking at Euro, where are we looking to go? Well, again, our swing level from this dealing range, this leg up, we're back into a discount. Currently, we have reached down into this volume imbalance last week. I think we're going to get down into it again. You have a daily fair value gap right here that was respected 2 different times. So I would be interested once we get below that weekly volume imbalance here. I would be interested to see what happens as we get into this daily fair value gap. We're approaching the OTE, optimal trade entry, from this big run up. And even further deeper into that OTE, you do have a daily volume imbalance down here. All of those act as draws on liquidity for price to rebalance itself and provide efficient price delivery. So again, that's just kind of how I'm seeing it. That's what I'm looking and waiting for. We've had, just like pound, we've had a big run down. We've reached into this order block. So if price is going to reverse here, then we need to see these highs displaced and closed above if we're going to see a trend reversal off of the downtrend that we're in currently. I'm going to remain bearish until the market tells me otherwise. And right now the market is in a downtrend. Whether you want to say that's because of fundamentals or whatever is going on, this is how price is being delivered. It's respecting bearish order flow. So it's dropping, respecting order blocks, and retracing to rebalance price, reaching into fair value gaps and order blocks. It's creating breaker blocks along the way. It's respecting those. So it's respecting bearish order flow. So I want to identify bearish order flow PD arrays and try to find entries on lower time frames around those areas that align with my system. I'm not trying to take as many trades as possible. I am a hunter. That's what Venator stands for. Venator is Latin for hunter. I am sitting here I'm walking into the woods, the forest of the market, and I want to take down the trophy bucks. I don't want to just walk in with a shotgun and start shooting at every twig snap and blur out of the peripheral vision of my eyes. I want to find out, where is the trophy buck? Where's he at? Where's he eating? Where's he sleeping? Where's he drinking? Where's he walking? All of those things. And I want to put myself in a position to take him down. And so that means I'm looking for high probability setups. I'm looking for the low-hanging fruit. I'm trying to get 1 to 2 risk-reward ratio, and with a 50% win rate, we will be able to accomplish this challenge of growing 10K to 2 million by the end of 2023. If we're patient and we actually follow our trading system and we do exactly what we said we were going to do. I was a little bummed. You know, this is yesterday. The trade that happened yesterday is unfortunate, as it did actually reach our intended take profit. But even if it had turned around before then, it would have wicked us out. Whatever. Break evens. This is why you follow your system. It could have easily have just turned around and hit our stop loss. So we go to break even at 1.5 R. And then we need price just to give us another 0.5 R. We hit our take profit. We close our charts and we walk away and look for the next high probability setup that's going to give us an easy 1 to 2 low hanging fruit. That's what we're trying to do. I wasn't mad about this. People say I was frustrated. Anytime you are that close to take profit and you get a break-even trade, it's frustrating because you followed your system, you followed your rules, and you see that play out. But it doesn't tear me up. I didn't lose sleep over this. I didn't get mad and want to get right back into a trade and be like, oh man, the market's not going to treat me like that. Again, the market doesn't give a crap about me. This is a demo account. I'm not even in the market. This means nothing. Absolutely nothing. It doesn't even know my trade exists. The market is just moving and I'm trying to swim in the ocean while the waves are and try to catch a wave. That's all I'm trying to do. And I am nothing to this market. Absolutely nothing. So, you know, followed our system. So now we have taken a total of 6 trades. This is day 10. We've only taken 6 trades. We've passed phase 1. The beautiful thing, and this was what I was hoping would have happened yesterday, is if we had won that, because we risk 2% per trade because we're only taking high probability setups. So I would have to lose 5 trades in a row to blow an account, which on my data and my system, can it happen? Yes, but I can't remember the last time that's happened. So I'm risking 2% per trade. That would have put me at 4%. I have to get 5% to become funded on this 10K account. So I just need one full 1 to 2 winner and then a 1 to 0.5 winner on my next trade to get funded. So we're just waiting for price to deliver into an area. So what I'm kind of anticipating now is an OTE back up into here. So this order block, this 30-minute order block right here is at the top end of that OTE. We have a fair value gap. It doesn't have to come all the way back up in here. So I'm just going to kind of watch and wait and see what happens in New York and see if we can get price to come back up in here. And then I would be interested in shorting this again from this level. So we will watch and wait the euro. We will look at the pound here. Again, similar. I would be wanting to see price get back up into this 15-minute order block here. Rebalance some price off of this. So this is the soonest I would expect the pound to reverse. It doesn't have to. It can reach up and grab some buy-side liquidity here. But if it's just going to remain bearish, it doesn't have to grab buy-side liquidity. It can just rebalance before it. It doesn't have to grab buy-side. I like it to grab buy-side liquidity, but when it's trending, you're just looking for entries in and around premium or discounts, a specific PD arrays. If we look at the dollar here, this is I said Monday morning that I remained bullish, and I'm expecting price to get up into this daily fair value gap, which lines up with this overall longer term optimal trade entry in this area up here. So we took out all of these fair value gaps and volume imbalances and buy side liquidity. So now our internal targets are this fair value gap and this fair value gap, and which coincide, both of them, with the OTE of this long leg down. So that's kind of where we're looking and what we're thinking as we head into Tuesday here. Because of all the news, we could reach and consolidate around until the news, but we'll watch and wait and see. I'm anticipating, whether this week or next, the dollar to reach up into this level here. And you can see we're in a bullish uptrend on the 4-hour time frame. We're making higher highs and higher lows. We're respecting the bullish order flow on the dollar. We have not taken out last week's high on the dollar yet. And we have not taken out last week's low on the euro. So they're in cahoots with each other currently. All right, so there you go. That's what we're doing. Let's take a look over at US30 on the 4-hour. We're in consolidation. We're moving sideways. I feel like I've been saying that forever. Until we're out of this dealing range. Until we're out of that dealing range, I'm not interested in trading US30 at all. Not interested. It's not trending. I want low, easy, low hanging fruit. That's what I'm looking for. So US30 off the table right now. Gold actually is broken, and I think gold is gonna, as the dollar continues its climb, I think gold's gonna come down and reach for some more of this sell side liquidity under here. These relative equal lows, perhaps. It's got some room to fall. We've just had a break of structure here. We had displacement. We haven't come back up in and rebalanced any of that. But we have a close below here on the daily would create a daily order block, which would mean we would probably be heading lower. On the 4-hour time frame, you can see we're respecting bullish order or bearish order flow, excuse me. We're displacing below lows. We're creating order blocks. We're displacing. We're respecting rebalances and order blocks. So we would anticipate that price is going to displace below this low if we're going to remain bearish on gold. And because of that, any move back up into this fair value gap, I would look for entries on lower time frames to get short. So somewhere up in here, you've got relative equal highs right here. So either today, maybe tomorrow, you get a pop up to rebalance some of this before we take out more lows down here. So that's my analysis on gold. If I just grab yeah, this is fine. Let's do this. So something up in here over the next 24 to 48 hours, I would be looking for price to react off of that on gold. All right, coming into the first half-hour close. I'm not sure. I guess the stream's working. We just don't have anybody watching yet. That's cool. If you watch us later, you'll get my analysis as we're getting into this. So here we are creating trending on the 15-minute time frame. This is pound dollar. I want to look at your euro. Here we go. Again, I'm wanting price to at least get into a premium level here above 50% of this last leg down before I'm going to anticipate. I'm expecting New York to pull up into here, is what I'm saying, so that it can reverse and give us potentially a low of the day, but it doesn't have to give us a low of the day. Again, if I'm getting in up here, I just need 1 to 2, and I can find that on a lower time frame. Like on the 5-minute, I can find an entry in there if I need to, but that's where I'm targeting all of this right now. Yep. S&P, again, looks similar to the US30. We're still inside this dealing range. We're just hovering around and consolidating. NAS has made higher highs. S&P did not make a higher high on the 4-hour time frame. US30 obviously hasn't either. So maybe there's some SMT there. Did NAS grab some liquidity to head lower today? I would think with the dollar rising, it's so weird to see the dollar keep going higher and see the markets keep going higher. So which one's lying? Which one's wrong? I would think everybody, it's like the market seems to be super bullish, but everything around you, when you look just in life, it's like, I don't feel like things are bullish. But it keeps marching onward. If I would assume if they get, if inflation numbers that are coming out, CPI numbers that are coming out this week, if they are trending lower and they can get the debt ceiling stuff resolved before America defaults on its debt payments, interest payments, then yeah, that's probably going to be a bullish scenario. Currently, the dollar is wrecking shop and running higher, and the markets are not. That's typically a risk-off scenario. When the dollar's rising, the markets are typically, the indexes are typically going down. The NAS is going higher, the other two are consolidating, but they're higher in the last couple weeks, along with the dollar being higher in the last couple weeks. So not great, not the greatest correlation that you typically see in that. Let's check out Bitcoin. We still have these relative equal highs up here that it could be, if it's going to move lower, it could be wanting to, there's a lot of buy side liquidity there. This is kind of my target for where I think it's likely headed, is 50% of this buy side imbalance right here, and it's a daily order block. We've reached into the buy side imbalance here, so maybe we don't get all the way down there, but I think you get a run of that buy side liquidity, and then it rolls over, and then from here you might get a run higher and make a new high for the year. I don't trade this. I don't. I just don't use it. But I know a lot of people do, and they're interested in it. I don't view Bitcoin as a currency. I know it's a digital coin or whatever you want to call it. It's really more of it's like an asset protector, I guess. Like gold. Gold is not a currency, but it's a safe haven. And I view Bitcoin as more of like a safe haven. It's not a currency. It's not being used as a currency. It's used as a safe haven. And if central banks across the world are going to introduce their own digital currencies, which behind the scenes is exactly what they're all setting up to do, they're not going to allow unregulated cryptocurrencies to be able to thrive. I don't know that they could eliminate them, but they can certainly just put the chomp on them so that their central bank digital currency becomes the operative currency in their culture. So anything that's going against and fighting against that culture, they're going to try and wipe it out and take it down. So again, I don't think they can't just eliminate it. They can't just erase it. It exists on the internet. They would have to erase the internet. They would have to erase the blockchain. And they can't do that. So it's not going to just disappear, but I don't think it's going to function the way people think it will once these countries and central banks introduce their own digital currencies. Just my opinion, not financial advice. But following market structure, we have had a break of structure here. This is also a sell side liquidity grab, leaving behind relative equal highs. So I would expect buy side liquidity and a grab of that, a shift in market structure to see it come down a little bit further. It would need to close above this high for me to change my bearish outlook on Bitcoin. We have now made new yearly highs on the dollar yen. We've grabbed all of this buy side liquidity. We have had a break. We've had a higher high, a higher low. This is the daily time frame. We've failed to make a higher high, and we've now displaced above it. And we've left behind some fair value gaps. So safe to say that you could anticipate, if it's going to make any higher high, this order block, this bearish candle should be respected. Dollar CAD. A lot of consolidation. We're inside a dealing range right here. This dealing range, we haven't gotten out of it yet. This low to this high, we have failed to make a new high, failed to make a new low, and now we're just kind of pinching down into a descending wedge. So it's just kind of winding up to make another move. All right, let's jump back over to the euro and the pound. They are providing us the most interesting setups today so far. Gold might. It would have to make a pretty aggressive run. Maybe it does on news this morning. Back up and rebalance something in here. Okay. Dollar's pulling back and beginning to rebalance some of this run up from the 5 o'clock hour. There's a few volume imbalances, which is why we need it to fall back. If it's going to take out last week's high, it's leaving it in place currently, which is great for us on our bullish scenario. If we're going to be bullish in the New York today and tomorrow, it doesn't have to get it today, but if it gives us a pullback into here and we can get a 1 to 2, and then it leaves that for Wednesday or Thursday this week. So I'm liking that it's dropping. And again, as we head into New York, I'm going to be watching what happens right around here. You have a 15-minute order block and you have a fair value gap, and it will be back into a premium of our last leg down. So we'll be watching how price responds when it gets there. And then my first this is where I'm looking to see price potentially get to on, it's at the bottom end of that 15-minute order block. And it's in a premium at an OTE and a fair value gap. So that could be a really nice spot to try to identify an entry today. But we've got some work to do there. On a lower time frame, we're going to need to see probably a higher high, higher low to try to induce bulls into the market so that they can get slapped when it starts rolling over. Oh. Let's see what's happening while we're waiting. In the socials, ICT drama. Shocker. And I'm an ICT fan, but there's drama around that guy all the time. People trying to rip his stuff off. I am not trying to rip ICT stuff off. I am trying to show people how you can take some simple trading concepts, identifying high probability setups, pass these challenges, and get max funded. Because if we're not trying to get max funded right now, you're missing out. You are missing out. ICT says, starting tonight, I will be covering Forex and futures on my YouTube channel. Free. Looks like I got some competition. I'm surprised he hasn't moved back over to Forex already, with the futures being just crappy trading environment. The high probability moves have been in Forex, specifically pound, dollar, and gold. Like, they have been moving and trending, and so I'm a little surprised he's taken so long to not move back over to Forex right now, because that's where everything is trending and moving. It's following his system to a T, and he's stuck over there on ES futures. And ES futures are just in a ranging small little type market, and they're not doing anything. Meanwhile, pound and euro and gold, they're all moving. They're all trending. So, come on, ICT. Get back over into Forex. That's where it's happening right now. If we jump up to the hourly time frame here, you can see we've repriced back into this fair value gap. It's not deep enough for me to want to get involved. I'm not looking to sell low. I want to sell in a premium. So until price gets back into a premium above this and into this area, that's where I'm interested in looking for a short sell on the euro right now. Similarly to the pound, I want to see it get back up inside here before I would anticipate a move lower. I don't want to sell low. We've already grabbed liquidity on the pound. This is a daily liquidity level of an old swing low. And so I would anticipate, now that we've dug down into it 1, 2, 3 for the last 4 or 5 hours, anticipate some bullish price action to retrace that London move down. The London session was very aggressive down. So dollar can either completely reverse, it could come up and continue, or it could just consolidate and not really give it. We've got our low. We could have the low of the day in, and we're just going to move around and bounce around here until red folder knows with news. Red folder news. Tomorrow, I think there's more FOMC rate talk tomorrow. Then we've got CPI data coming out. We've got employment data coming out. All those things could create a ranging market, and then we get your volatility on Thursday and Friday. So if we can get a move back up into this 15-minute order block and into these fair value gaps, then I would begin to look for a setup, maybe on the 5-minute time frame. But since Asia, we've just moved lower, and then London dropped continuously lower. So we've had our range expansion for the day already. So for price to hold this range expansion and maybe get a little bit lower, I would not anticipate a full reversal all the way to London. I would anticipate a rebalance and the trend continuing, or we just start chopping. Same with euro, same thing. Asian session fell, London session fell, rebalanced, fell hard again. So I would anticipate, I don't anticipate the market just completely falling and giving us another 60 pips. But if it could give us 20 pips from this area, it's all I need. It's all I need. You got a couple viewers on there right now. Hey, say hi in the chat. What's up, Corey? Welcome back, buddy. These are our setups we're waiting for. I'm not going to try to get involved here. This is not a high confirmation order block with all of this area up here to rebalance. I'm going to wait for price to come back up in here to rebalance. This is the areas I want to sell at. Maybe we get some engineering of liquidity here, you know, where we kind of reach in and we just start carving out, and then we get a grab and then a lower push down. That would be fine too. Or it could just start making higher lows, higher highs, higher lows, get up into here, and then we get a break of structure and we head back down. I need to get a, where's the drawing tools? Drawing tools? No. Patterns? No. Nope. Is it brush? Is that what it is? Hey, yeah, it is. Okay. So yeah, if it kind of does this and then kind of carves out some liquidity, right? It just kind of does that, and then you get a run up like that. Then you get some displacement down, and then you look to try to get in somewhere right here or right here. Well, again, we're not in a rush. I mean, I want to, I definitely want to pass this challenge and get funded, but I'm not in such a need to do that I'm going to take less than an optimal trade setup. I want to take my high probability setups. That's what I want to take. Order blocks, fair value gaps, breaker blocks. So we've got in a premium level, we've identified our fair value gap and our order block that we're going to key off of here. Oh, dude, yes, man. So right after I got off the stream, that setup formed. I tweeted it out. The entry, I tweeted out everything. And it happened like 15 minutes after I got off, 20 minutes after I got off. It formed. We got the breaker, we got the fair value gap, beautiful unicorn entry. And it was this right here was crazy. Let me just go back and I'll just so this is how it played out. All right. So I called it as this candle was dropped, and you can see this all on Twitter. It's not like I'm just making this up right now. You have a 15-minute fair value gap that grabbed. So this moved down. We grabbed an old high, grabbed liquidity. We had displacement back below it and a close below with a fair value gap inside. Tweeted out the entry, put my stop above the 5-minute and even a little bit more. And I'm glad I did. Thank God. So we get triggered in about 15-20 minutes after I send out the signal, and we get an immediate reaction away. So that's 5 minutes, and then we start pulling away. Price starts pulling away, pulls away, gets almost down to 1-to-1, and then on the next candle, let me just show you on the 1 minute time frame how this plays out and the emotions that go through this. So this is nuts. So it drops and I'm like, okay, this is great. So we get all the way to 1-to-1, a little bit more than 1-to-1 right here. And I'm like, okay, cool. This is what happens when you have a good, strong entry. Price starts moving away pretty quickly. And then that news came out, that fake picture with AI came out of the Pentagon and an explosion at the Pentagon or something, and the markets go haywire. And in 3 or 4 minutes, this whole thing, I'm like, it starts running. Look at that. And it's like, oh, the market's collapsing. What's going on? I'm like, oh, crap. We go from over 1R in profit, and in 5 minutes, we're about to get slapped. We get super close, and then it just immediately reverses and drops back down. So quite the roller coaster of emotions over that 15 minutes. And then we get this quick, massive drop down right here. Right there. triggers my, I had an alert set at 1.5, triggers my break even, which I set just inside profit and quite not far enough. I should have gone another half a pip to cover the commissions. And then of course, wicks right back up right there, takes us out. And then over the course of the next, I don't know, like hour or so, it hits our take profit. So that kind of sucked. But really no big deal. I get a lot of break evens, so it's fine. The market is the market. It's always here. It's not going anywhere, and it's always going to provide high probability setups. It can't not do that. It's the way that the market moves. It's the way that it delivers price. And so we just are patient and we wait. And this right here is this move down right here. Bears are going to get trapped on that sell because this is going to come back up. Same here. I still feel like we're going to get a run up in New York. Dollar still needs to rebalance down into here. I don't think we're just going to go to a higher high here. I reserve the right to be an idiot and be completely wrong on that. And it could just start crapping the bed and completely running for liquidity. And if it does, it can do it. Cool. I'll wait till tomorrow and look for another good setup. I've identified what I want to see price do. I want to see it reach back up into a premium level, wick into some fair value gaps here. Frustrating part about it is that had we won that, we would have been at 4%. And then we just need another small little like 0.5 R trade today. You can see these relative equal highs here on the 5-minute. And this is why I say I think it's going to get run. This is just too tempting of a rebalance. And you're kind of creating 3 drives higher. 1, 2, 3. You're creating a small little uptrend right here. Now, if we get a break and close below and make a new daily low, I would be wrong. And I don't take counter trend trades. If that's part of your system and you feel confident and comfortable in them, you could anticipate a run from price here back up into this premium level. I don't do them because price doesn't have to go back up there right now. It can just dig lower. This is that weekly volume imbalance here on the euro. This big yellow block right here is a weekly volume imbalance. We dug into it last week already. We didn't quite get and fill it in, so there's still a little bit of meat left on the bone there. So if we make a new low for the day here, cool, then I'm not going to participate. Because all we've had is basically sell side delivery today. I want to see a pullback. Corey, you follow anybody else on YouTube? You go watch anybody else's streams? You may not be here anymore. Haven't seen Muhammad around in a couple days either. Yesterday we had our highest number of streams. on the actual live stream. And I guess they didn't want to come back. It doesn't. This type of live stream is not super entertaining in the fact that there's a lot of fast action and we're taking trades every day. And that's why 90% of traders fail. It's because they take trades every day and they have to find a setup somewhere to do something. This is my dollar analysis, expecting a run above these equal highs and rebalance some of this, and I would be anticipating another short lower. But again, it doesn't have to. In a trending market, you don't get deep pullbacks all the time. In a trending market, you get order blocks, price trades into order blocks, falls away with displacement. Oh, well, I feel so honored. I'm the only one you watch. There's some good streamers out there. And they all have their own systems. They all have their own way of doing stuff. I wonder what the latency is here. I think it's about 10 seconds. Which isn't bad. Oh, get comfortable. Corey, you're a young guy. Why, or what would you say is the most attractive thing about live streaming? Like if you were, like you're coming in here and you're watching this, what would make it better, one? Or other guys your age that are looking to get into trading and trying to learn how to do this, what would pique their interest and make this channel, this stream more attractive? Something they would want to come and sit in, watch and learn. Because I'm open to suggestions. I know how to trade. New to streaming. And I'm not just doing this to try to gain some kind of massive following, but I do want to help people, because there are so many people that cannot pass these challenges and get funded, and they're out there watching guys that are calling trades or paying for signals or whatever, and it's not working, and they get frustrated and they quit, and there's a better way to do it. There's a better way. So you can see the dollar here is on the 5-minute time frame, not quite reaching its daily high, and euro is pretty close to taking out its daily low, a lot closer. So not sure what's going on there, but we'll wait and see as we come into the 8 o'clock hour, New York 8 o'clock hour. Do we get any kind of retracement into a premium level here? And again, it doesn't have to come and try to retest London high or Asian high, but giving some kind of pullback. I would imagine New York is going to give us, as we open here, some kind of pullback. I've got to make a new music bed. Would help me. Can't really think of anything. Well, if you do, tweet me or put it here in the chat. Let's read some headlines. US dollar improves early Tuesday ahead of S&P global flash measures new home sales. That was 6 minutes ago, but an hour ago, dollar strengthens broadly on Fed rate expectations. So if they raise rates, that would mean the dollar would be more attractive. Because the whole time they've been raising rates has caused the dollar to rally. So if they pause raising rates or lower rates, that would be better for the market and bad news for the dollar. So I'm not understanding that headline. Markets nervous on debt ceiling uncertainty. U.S. yields rise. That's why the dollar's going up, because the yields are going up. Because the dollar is more attractive as an investment than stocks, indexes. So it's just all, it doesn't make any sense. It's saying opposite things. Dollar back to 2.5-month high. Actually, it's not. It hasn't gotten back to a 2.5-month high. It got close, but it didn't get there. Which is why I like a more bullish dollar. It's leaving these highs in place, creating relative equal highs right here. It's going to get run today or tomorrow, or the next day. Next 72 hours, that's getting taken out. Gold's still coming up. Dollar here tried to push down. We had a bullish close. Still think we're going to come back down and rebalance into this level. As New York opens, we're getting some bullish run up. You have relative equal highs up here, some buy side liquidity imbalances, and then hopefully we can get up into a premium level. That's my game plan today. A lot of sitting and watching and waiting. This is the part that frustrates the crap out of new traders. What are we doing? We were trending, and now we're consolidating. Until it makes a new low for the day, or it takes out this buy-side liquidity with a run up, a false move up to rebalance price and grab liquidity. We sit on our hands. We do not get involved. Same thing. Pound is trying to reach up into this fair value gap and grab some liquidity here. There's more buy-side liquidity up here on the pound. So we're getting some move lower. Getting some move higher. Fell to make a new low. If price is going to move lower, it's going to respect this order block right here, which is also in line with this order block right here. So if price is going to move lower and just fall away, it's rebalanced into this price range, or into this fair value gap. But we're still inside this 5-minute dealing range here. We didn't make a new high. We haven't made a new low. This is just choppy. There's nothing attractive about that to me. And same with the pound. We did reach up above that high there on the pound, and we did not get back up into this fair value gap on the 15-minute time frame, which is where I want to see it go. A nice, healthy reversal into this order block, into an OTE rebalance price. That's where we want to see it go. Same on the euro. Get back up into this order block premium. We'll see which one cooperates with us today. Gold, same thing. Relative equal highs right here with imbalances above. So you've got buy side liquidity all right here. And fair value gaps to rebalance, volume imbalances to rebalance. So price is engineering liquidity the way we want, and now we want to see it move, and we're anticipating it to move like it has in the past at a lot of different times. So we're going to wait for it to do what it wants to do so that we can catch the next push down. We don't want to get caught up in this engineering of liquidity. That's all it's doing right now. So just be patient. It's these times right here that are hard for me when I'm streaming, because it's like you can only say be patient so many times, and you can only describe what price is doing so many times. So I'm not Mr. Comedy guy. I'm not jokes guy. What I guess I can ask you questions. That would help. Like, what do you think is your biggest weakness in trading right now? What do you think you need to work on the most in how you approach the markets and trade in your system? Is it strategy? Is it psychology? Is it analysis? Is it trade management, risk management? What do you think you need the biggest area of growth in? It took us 7 days to pass phase 1. We're only, this is day 3, so we started Friday with our phase 2. We traded yesterday on Monday. Today is day 3 of phase 2. It's day 10 overall of the whole thing, but we're only 3 days into phase 2. So if phase 1 took 7 days, I would anticipate phase 2 taking another 7 days potentially. So I'd love to get this thing knocked out this week. We need one winning trade and one tiny 0.5 R trade. But we're not just going to jump in. We're going to be patient. Take our big, beautiful setups. Oh, I tried this FOMO and analysis. Bro, FOMO is the It's one of the biggest monsters that traders have got to learn how to tame. It never goes away. It never goes away. Yesterday, on this trade, I had FOMO right here. It wicked us out. I see price moving and I have FOMO. It's like I had a winning trade in the bag. I have a winning trade in the bag. FOMO, FOMO, FOMO. It never goes away. But you're not missing anything. You're not missing anything. I don't know why our brains are wired so much to think that we think in the immediate. And we're so used to, I guess, immediate gratification. The way our culture is wired, everything is instant. And if we can't get that instant hit, that's what our brains crave. And so that's what drives FOMO, the fear of missing out. You're going to miss out. It doesn't matter. You're not missing anything. It's just the market moving, and it's going to move again tomorrow, and it's going to move again the next day, and the next day, and the next day, and it's always going to be moving. And there's always going to be good, high probability setups that give you low, easy hanging fruit to grab. You're not missing anything. It took a long time for me to get out of that too. I have revenge traded so much. I have gone in and seen price start running and been like, well, if I just click sell, it's going to keep running. And of course it doesn't. And you got in, you sold low and you bought high, and you get stung so many times. Eventually you're like, I'm not going to do that anymore. It's like a dog going up and putting his nose on an electric fence. After one or two times, that dog isn't going to put his nose on that fence ever again. But we are dumber than dogs, unfortunately, in most things. And so it takes us, our heads are super hard. And ultimately it comes down to pride too. Like, we're super prideful and overconfident and arrogant, and we think we know everything. And we want to be proven right, and so we think, I'm just going to do this, and I'm going to show. You cannot come to the markets and trade from an arrogant mindset. You have to come humbly. You have to come and approach the markets with humility, and you have to come and be like, I am lucky to be here. And if I'm fortunate to have the proper focus and concentration and discipline that I need, I can get on top of this dragon and ride it for just a minute. It'll make my day. It's a beast. You can't tame the markets, but you can try to ride them. And the only way to do that safely is to wait. You are not missing anything. People want to get rich quick. They think this is a way to get rich quick. And they see all these people on social media and Instagram and Twitter and YouTube flashing all of their huge gains and their Rolexes and their Lamborghinis and their vacations to Greece and wherever. And they're like, oh, well, I can do that. You can't. I think the current statistics are something like, on some of these new firms that have no time limits, I think some of the statistics are around 5%. 5% of people reach funded status, and then 3% reach a payout. So why are all these people sucking? Why are all these people not being able to reach funding status? Well, for me, I would try to pass challenges quickly. When I was failing challenges repeatedly and again and again, it was because I was like, well, I'm just going to get in there and knock this out. You know, I've paid people for signals. Bad idea. I've paid for mentoring. I've paid for private communities. I've paid for courses. I've paid for all of it. But I've paid the most in the markets. That's where I've paid the most. The markets are the best teacher. And if you don't listen to them, the lessons it will teach you are painful and frustrating. And it wasn't until I realized that the secret sauce, the way to cheat the system, is to not trade. That's how you become profitable, by not trading. You protect your capital, and when you see a setup that screams at you that fits your system, then you take that trade. So that's how you cheat. That's how you pass challenges. And that's why no time limit firms are going to be the way to go for the future. If you're not, you've got to trade on a no time limit firm, because you could go 2 weeks and not take a trade. And if you're on a time limit firm, then trying to realize you have to make 8 or 10% profit in only 2 weeks left, it induces FOMO. All of these firms out there that have time limits on their challenges that you have to pass, especially phase 1, these massive amounts of returns in just 1 month of trading, it fosters gambling. It fosters risk taking. It does not foster high probability self-disciplined trading. So I'm glad these firms are coming up and changing the game and introducing no time limits, because that is truly in favor of the trader, not the prop firm. Now, I'll take that back. I caveat that by saying it's in favor of the prop firm if the prop firm is actually trying to find good traders. And they're actually trying to find traders that can be consistent, that they can copy, and they can use to grow their own master margin accounts with these brokerages that they're in. That's how you know if you have a prop firm that actually is trying to value you as a trader. They're giving you all the time in the world to show that you know what you're doing, to show that you can wait and be patient. You can show self-discipline. You can do all the things that need to get done to be able to call yourself a professional day trader. And the time limit firms, they are looking to profit from failure, ultimately. Ultimately, that's what their goal is to profit from failure. They create just enough wiggle room in selling the dream of managing 6 figures and selling the dream of 80-85% profit split on a 6-figure account. And then they create a system in which it's so appealing to try to get that you're willing to embrace less than ideal trading environments to reach that goal, which then creates in you as a trader this desire to increase your acceptance of risk and increase the desire, the FOMO of not being able to get that 6-figure account. Seeing it's within your reach, you just make unwise decisions. That if you were just trading your own 6-figure account, you would never make. Because when it's your money, when it's your skin in the game, you're not going to trade like that. So get those no time limit firms. Only take high probability setups. Now I can show you, we passed phase 1 in 7 days. You can pass these challenges in 30 days. You can. I've done it. I've failed before I've done it. I have failed many times. I need to go back through all these firms and look at all the prop firms challenges that I failed, these accounts that I failed. It would be true authenticity and vulnerability, and it would be embarrassing because I was right fat in the middle of the 90% of people who fail all the time. That was me. Over and over and over and over and over. All the money I've spent. I have now. I am profitable now. I am funded now. But I haven't yet recouped all of the financial investment that I have put into taking challenges, paying mentors. It's a lot of freaking money. But I will probably recoup all of it in the next 90 days. I'm guessing. Based on what my current payouts I have gotten, and yeah, just how I manage my system in trading now this year. I'm hoping in the next 90 days all of that will be made back up. And in the end, worth it. Worth it. Every penny. I wish I would have learned faster so I wouldn't have had to put so many pennies in. But where I'm at now and where I'm going and what that will provide me and my family, worth it. All the frustration, all the pain, the depression, the anger, all of it, worth it. I love watching the market move, man. This is so fascinating. I said it would probably engineer. Go back 20 minutes and look at my stream where I drew out this line. I said it, called it, and it's just doing it because the market is repetitive. It engineers liquidity. It's created relative equal highs. We are leaving the low in place, the daily low in place. We've got stuff to rebalance. It's got business up here it needs to deal with before it does any more business down here, in my opinion. Now, it could just be engineering liquidity only to fall away and not touch any of this buy-side liquidity in these imbalances. My main account is not in drawdown, and it's out of drawdown, and I have a payout coming up on it. Not a big one. I've already gotten my refund on that, and I'm leaving it to, I have like 4 or 5 days, I think. I need to go look, but 4 or 5 days. I'm not trading on it right now. It's just the payout on it will be like $1,000 or something. And then it'll set it back to break even with new credentials, and then we'll go back at that again. But I'm trying not to talk about that account too much on this stream. And that's why you can see I've got on my stats here, funding achieved is $0, because on this challenge, I haven't been funded yet. And I really want to show people how you can go from $0 to funding, to payouts, to growing to larger challenges, and etc. on repeat That's really what this stream is about. So I don't mind talking about the other funds, the other accounts I have, but it doesn't really matter. This stream is what is most important right now. So that's what we're gonna focus on. I may just stay if this stream does really well and this funding process goes really well. I may just adopt this specific trading strategy and rule set to all of my funded accounts. I have different like on that account, I have a different RR that I use. I don't have a specific RR. In fact, I have, I try to catch larger moves and expansions. And when I get into a trade, I start targeting quote unquote logical price levels where price is likely to revert to. So sometimes that's only a 1-to-1. Sometimes that's a 1-to-6. It's just more subjective in its profit taking. Here on this system, I'm trying to teach traders who are not profitable, trying to teach traders who have having trouble passing challenges and getting funding, a very simple, repetitive system that you can take and use to obtain funding and create massive amounts of money with it in general. The simpler the strategy is, the better it is. So the more complex your strategy is, the harder it's going to be to replicate over and over in the markets. So you want a very simple, repeatable system. Like I think of it in kind of sports analogies. I played sports all my life growing up, and so like pitching, for instance, in baseball, the pitchers that have the most simple delivery can effectively repeat that over and 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 over, and that's what makes them so good, because there's just minimal movement and there's minimal action involved to repeat the process of accuracy and velocity. Basketball, shooting, a very simple shot, the way you hold the ball, the way you get into your shooting form, your follow through. It needs to be a very simple, repeatable pattern. The more simple it is, the more repeatable it is. And the more repeatable it is, the more consistency you can have in your trading outcome. And so that's why on this 10K to 2 million funding challenge, I'm using one simple concept of breaker blocks, order blocks, fair value gaps. Those are what I'm looking for and looking for price to react around at. You see gold here respecting this fair value gap in this order block, rejecting off of it. I still think it has business up here it wants to do with these relative equal highs, buy side liquidity. Dollar has engineered now sell side liquidity with some unfinished business below. Pound kind of engineered, it hasn't engineered quite as beautifully as the other ones, like very clear relative equal highs. It's just wanting to reach up into that order block and that fair value gap. So we're gonna watch and wait and see how the pound reacts up here. Euro is not moving the way pound is moving. Pound is moving up. Euro is moving down, and dollar is moving up. That's why the euro's dropping here. I'm going to pause real quick. I gotta let my dogs out here, so let me. They're ready to do their business, so let me pause real quick, and then I'll be right back. All right, we're getting some movement here. We've got news come out at just now at 8:30, and it's very strong for the dollar and bad for foreigns currently. So just watching and seeing. Price did not come back down. It's leaving all of these relative equal lows here. Looks like it's going to try and take out last week's high right now. That's fine. If we get displacement lower here, and we get a fair value gap, we could look for an entry to trade with the trend. Surprised it did not first pop up and get up higher. We've made a new low here. We've made a new high there. The indexes, not a huge reaction. US30, not doing much. But Euro is dropping pretty hard. We've had displacement. Break structure. We'll see if we get a fair value gap created here. Dollar has taken out last week's high. Euro has not taken out last week's low. So if these are going to be in conjunction and move with each other, then we would expect the euro dollar to take out last week's low. Pound also has not taken out its daily low yet. If we get a close here above this structure level, this creates a 15-minute order block, and you could expect, if it's going to continue bullish, you would want to see that order block respected. Same thing on, well, not on the pound, but on the euro. You would anticipate, if this is going to remain bearish, that this order block would remain in place and be respected. We still have 9 minutes on this 15-minute candle, and so we're not going to do anything until, bare minimum, until this candle closes and we see what kind of close we get on this 15-minute candle. Then we will look to see this is just so, this whole level up here just is screaming at me of buy side liquidity with all these imbalances. We've taken out London's low. We did not get a deep pullback into an optimal trade entry, and news has now sent us lower. We've had a break of structure, and with some very strong displacement, energetic move. Gold has not had quite the energetic move. These are super clean. Pound is now falling pretty hard, leaving this imbalance in this order block untested. Dollar's pushing again. Euro's still dropping about 50% of the way through this weekly volume imbalance, like it did over here. These are old weekly lows here. That would be our next point of drawing liquidity. And it could reach that today. We've had a lot of movement already for the day, so I'm not sure how much more daily expansion we have. But we'll trade with the trend. With this buy side liquidity left in place and these imbalances left to be rebalanced, if we're going to go lower, we're going to go lower and respect that bearish order flow. So you would put your stop probably above here. I'm just thinking ahead here a little bit. I would probably do something like that. But we'll wait and see. If I was just going to trade off of this order block, I would prefer to there to be a fair value gap into an order block at that same level. Back here, order block, fair value gaps, OTE, multiple confirmations. We just didn't have got price to pull back up in there. You can now see price has grabbed the London session low. We've grabbed some sell side liquidity. We still have buy side liquidity in place here. Dollar grabbed last week's high. And these clean lows here. Again, I want to see it sweep this sell side liquidity on the dollar and reach back down into these levels. And that may not happen in our stream, but it could happen off stream. But I'm just explaining it to you now. What I'm going to be looking for is a sweep of this sell side liquidity and come down and back into this level here on the dollar, here on the pound, and up into these levels on the euro. You don't have quite as clean equal highs as you do on the dollar that you see here on the euro. On the dollar, these were more flat. This is still good sell or buy side liquidity here on the euro. You're getting a nice rejection. We still have 4.5 minutes. This thing can easily drop and close and displace below here. But if it closes up and gives us rejection, I would definitely think we're going to get this buy side liquidity run as an anticipation for the rest of our New York session here. Still have about an hour and a half until the London close-ish. Maybe about 2 hours. But euro, you can see the euro right here did not take out last week's lows. The dollar did take out last week's lows. So the dollar reached up, grabbed that, grabs buy side liquidity. These are relative equal highs. It's grabbed up into that. Do we see a reversal? I'm still bullish dollar overall, so any reversal I see, I'm going to expect higher time frame PD arrays to be respected. So if you look on the 4 hour, where might a reversal, where we have 2 hours left on this 4 hour candle, it looks like, I mean, in 2 hours we can do a lot, but if it closes somewhere around where it is right now, it's leaving all of this imbalance here. And you can see here, price likes to rebalance. When you've only had delivery to one side, it wants to rebalance delivery. It wants to move efficiently. It wants to create efficient price action. So gold, again, a lot of buy side liquidity up here. These are super clean. I would anticipate something in here before gold melts further. Seeing these lows here, these are the lows I was talking about, these clean lows on the dollar that you don't have it quite as clean on the euro. But I would think the dollar wants to come back down into here. Pound heavy rejection. Euro heavy rejection. Got a minute and a half left. It definitely looks like this is going to be a nice rejection candle that's going to push this thing back up. I'm going to add to my to-do list to change this music bed. All right, so we're definitely going to close 15-minute here as a stop hunt liquidity grab. Any bulls that were anticipating and counter trend trading this up into an OTE would have had their stops here, and they just got ran. And now that it's grabbed all those, it's probably going to go up there. and piss all these people off that were long from London, thinking they were going to get a retrace off of this London low. They thought, oh, the London session, the low of the day's in. Nope. And I don't, if price gets back up here, I don't need it to make a new low of the day, because we're just looking for 1 to 2. I just needed to do something like that. Now I could just drop here for the rest of the hour, fill that wick in, potentially. Dollar's still climbing. That rejection is not going to hold, it looks like. It looks like we're going to make some new lows. We've had, if this hourly candle closes bearish, we will have had 1, 2, 3, 4, 5, 6 hours of straight bearish price action. No buy side delivery. And on the 4 hour, it's actually 1, 2, 3, 16 hours of straight downside price action. And you can see it can go down for a long time, and then you get these short little reprieves, and then you get these big displacements. So if we're going to continue displacing, this would be the first leg of displacement, and then you would expect larger displacements. This is OTE area, buy side liquidity, and daily fair value gaps on the euro are resting below this weekly volume imbalance. If you're looking at a daily candle, ICT talks about this power 3. You have your it talks about midnight. New York midnight is kind of the true daily candle. That's when everything starts happening. Let's see, that was right here. So you had your open, your high, your current low. So this is your this is what your daily candle looks like right here. You got your wick here, not a very straight wick. And what is your wick going to be on the bottom? Open, high, low, close. So you're trying to anticipate where's the daily expansion. We had our daily expansion in London, and we were anticipating. Often when you get a big expansion in London, you'll get a retrace in New York that offers a further push down. You can also get a continuation in New York, which would mean your daily candle could look more like this, and your wick's going to be way down here. So if we get a continuation, your daily candle is going to look like this. And so when you wake up, and I get up and I start analyzing the charts and I see, well, what did London do? London gave us this big daily expansion range. And when you look at the daily candles overall, you can see we accomplished in London what most full days look like. You look back at our average daily candles, we have accomplished all of that in London. So London did a massive amount of work in our daily range. So the likelihood that New York gives us the same amount of expansion as we saw in London is pretty low. Because here is the London expansion right here. So if we were going to double that, how far is that? Let's just say 38 pips. Oh, I can just do this. My gosh. Plus, it has to leave a wick. Most candles are going to leave some kind of wick. It doesn't have to be a super long wick, but it's going to leave a wick somewhere. So, is it more likely that New York gives us the same move that we got as London? Or is it more likely that New York grabs London lows, maybe makes a little bit of a lower low, and then just kind of bounces around? You're not going to get, I don't think, in general, this is obviously everything can be broken and there's exceptions to every rule, but in general, my experience says you're not going to double the range of London with New York. Meaning you're not going to, the daily range when London has already basically given you the full daily range. I'm not anticipating price to get this low today. It can. This is a weird time of the market. All kinds of stuff is happening. A lot of fundamental news, a lot of just stuff going on in the world. So you can get massive big swings. I'm just talking about in general, I would not be anticipating Like if I were gonna think that this order block was gonna hold on the 15-minute time frame, if this candle closes and we get a close below, if we get a close below this wick on this body here, then this 30-minute order block, if you were gonna enter as price came back up into that 30-minute order block and you put above the swing high, to get a 2.2 is, I mean, that's a lot of work to do, and London's already done a lot of work. Can it do that? Yeah. Is that a strong likelihood? To me, the strongest likelihood and the least amount of work I want to trade to do is when you get a retracement. You get a pullback, and we haven't gotten that deep pullback from New York. And I'm sure there are people out there on Twitter and Instagram and YouTube right now that took this trade right here. They saw this break of structure right here. They saw this fair value gap, and they got short as price came back up into it. And they're short right now. And to get a 1 to 2, they've got to come all the way down here. And it can do that. Not a high probability setup in my mind. Not with all that buy side liquidity sitting up above it. Didn't like it. Didn't like it. Nothing clean here on US30. Dollar's really pushing. Euro's really pushing. Pound is lagging behind a little bit. If you don't see the market doing what you want it to do, it's okay. I laid out my plan for the morning. I planned my trade. I wanted to see price get into a premium. I do not sell at the lows. I want to sell when price is high. And if the market does not give you an opportunity to do that, you don't trade. That's the secret to being profitable. You don't trade. You don't know when price is going to give you the retracement you're looking for and when it's not. You don't know. No one knows. So there were people that have made profit off of this move. Long term, they would have gotten slapped like these people from London who wanted to see a retracement and counter trend trade. If it doesn't fit your trade system, if it does not fit within your rules, you didn't miss anything. You only miss a trade if it's a high probability setup that you fail to execute on. That's when you should feel bad about missing a trade. is when the trade meets your criteria and you don't execute. The buck is standing there, ready to be taken down. You're ready to take down that trophy buck, and you don't pull the trigger. That's when you should feel bad. I don't feel bad about any of this that's going on right now. I feel absolutely nothing. I'm not mad that it didn't come up. I'm not mad that I couldn't get in. I really just don't care. Like, I'm just watching. Again, it's beautiful to me to watch price deliver and watch how the market just keeps painting candles and how it does it. It's fascinating to me. I know what I want to see. It didn't do what I wanted to see. And so now I don't do anything. Just now I can just enjoy watching the market move, knowing I have nothing at stake. There's no pressure to perform. There's no trade on that's making my heart race and guessing which way it's going to go. It didn't do what I wanted to see it do. So right now there's no trade setup because it's not cooperating. Gold is looking really nice for a setup. If it can reach back up in and grab some liquidity here, I'm going to set an alert. If gold can get back up into here, I'll set an alert there because that is a really pretty setup. Engineering liquidity. It's failed to make lows, like the dollar's rising, euros dropping, gold should be dropping, and it's not. So I would really like to see gold, when the dollar eventually does pull back, see gold come up into here. I'm just going to send an alert. I'm not going to do anything when it gets here. It's just letting me know, hey, we're in buy side liquidity territory, and so now we can start looking for displacement and change of character lower to see gold melt off. So I'm going to set an alert there. If the pound gets back up above into here, I'll set an alert. This is letting me know we're grabbing some buy side liquidity. We're hitting a bullish PD array with an order block and a fair value gap. So we'll wait and watch. And then again with the euro, if price can get back up into that area here, that's as soon as I would want to participate in the euro. 50%. Yeah, that's cool. So I got my alert set. There's really nothing else to do. There's really nothing else to talk about or stream. We didn't get a retracement. We may later today. So we'll just see how the market plays out for the rest of the day. Follow me on Twitter at Venator Trading. If there's anything that comes up, I will tweet it out over there. And then I'll try to put a short together for YouTube later this afternoon and recap what went down. So thanks for watching. Glad you guys were here. Like and subscribe. Tweet it out to anybody that you know that might be interested. Get some more viewers in here. Get some more chat action going. But that's all I got for the stream today. Hope you learned something. Hope you learned not to. You don't need to fear missing out on anything, because tomorrow we're coming back and we're going to do it all again. And we're going to find. I promise you, the market's going to give us a beautiful setup at some point this week. And I just need one. That's all I need. One beautiful setup. We're not on a time limit. We're not on a race, and we're going to get there. So you'll hang with me. Thanks for watching, and we'll be back tomorrow, 7 a.m. Eastern. Y'all enjoy the rest of your day, and we'll catch you later.